Well, it's our great pleasure to welcome back to the show, fan favorite, everybody's kind of favorite bond trader, and just an all-around terrific guy, Morris Sachs.
How you doing, Kevin? It's nice to chat with you.
It's been a while, and
It has been.
When I was thinking about this segment that we're going to do, which is our VWAP, our videos that we analyze and pull apart, I thought to myself, there would be nobody better than Morris Sachs to do this with me. Quick-witted, thinks on his feet, willing to say stuff. You're just like the perfect man for this.
Certainly not constrained by any employment responsibilities. That's right. For sure.
So as I explained to you, the only rule is I want you to jump all over, give me your opinion, and let's just jump into it. Let's get right to it.
Let's go.
Could be as impactful productivity-wise as the PC was.
Stan Druck,
had so much
of
Stanley Druckenmiller,
social networks and other things that have not enhanced productivity. There are some hopes there. But
now, my question to you is, Stanley Druckenmiller, obviously just a legend, terrific guy, and he's getting interviewed by your 13D fellow there.
Kirill Sokolov.
That's right. And they're of the opinion that this, or not they, I shouldn't put it to Kirill, but Stan's at least of the opinion that this AI is transformative. I'd love to just hear.
Stan is a legend. People always seem to overlook the fact that he ripped up the NASDAQ at the absolute high and got blown out of his job working for Soros, right? Do I have that correct? Kevin?
I'm no comment. I'm still hoping that Stan will return my call someday. But there's not just Stan. Here's another one that's talking about AI.
6 months ago, before AI, before the
Paul Tudor Jones.
Right?
Yeah.
Hear what he says. Listen to what he says here.
Completely different story with regard to the inflationary future and with regard to all the inflation hedge.
I'm kind of just shocked at how quickly these guys that used to be in the inflationary camp have embraced AI, which is kind of surprising that perspective, but how they've then assigned this macro kind of change in the environment due to it.
So, I have this podcast with Liam Allen, Inside Baseball with Old Chestnut.
Yep.
And we pick these things apart. And what I think has happened here and why Stan and Paul are latching on to the AI is because they're a little bit lost with the situation the economy's in, and they're not accustomed to being lost. These are guys that are very confident and have a framework and a methodology. The problem is, that phrase from the Army, no three on a match? Eventually...
Whoa, I don't know this phrase. What is it?
Well, so, in the trenches, if a guy would light a cigarette, a sniper could see it. And so as the guy lit the match for the second guy, the sniper would get a real good bearing. And when the third guy got his cigarette lit, the sniper would fire and blow the guy's head off.
Okay.
So you do these trades long enough. For instance, you did a recent piece about the basis trade, right? Yep. Well, I did my first basis trade in the 80s. And, now it's in textbooks. But
why don't you tell people who you did one of the first big ones with?
Well, the big one was with Jones, where he was buying a bunch of 5-year futures ahead of the stock crash. And it worked out very well for him. I, of course, sold him the futures and bought the cash, hedged it up. And when it came to an unwind, I kind of had the ability to put a very full price on it. So we both made out. He did obviously a lot better than I did. But as I like to quip, I think he's done okay since then. I'm not sure. But I think what you're seeing, and it is a little symptomatic when people start to talk about the payroll numbers. I know this is a little bit off the rails from what you were getting at, but the economy is in one of these sea changes. And that's why I don't look at payroll numbers when I think we're in an economic turn, it's because they're backward-looking numbers. They're heavily adjusted, and they don't mean a lot. And I think when you have successful guys like Stanley Druckenmiller and Paul Jones, they get a mental model, and it works for a number of years. But nothing works forever, hence the no three on a match, right?
Yeah, okay.
And then, so they're trying to resort things. And Stan, talk in his book, because at one point he owned, maybe still does a lot in NVIDIA, which obviously participated in that. Jones, obviously successful guy, but he drank the Kool-Aid with the Novogratz guys with the Bitcoin. And
did he get a tattoo as well?
I'm not intimate with Paul, so I don't know. I'm not intimate with Novo either, but he posts all that shit. So I will say, as far as the artificial intelligence goes, I've heard about this stuff for 20 years, and any number of times I've had people tell me that was going to put guys like me out of a job, and it has put a lot of market makers out of a job, as you've seen, where you get the bots run these programs to front run the investor orders and stuff like that. But I don't see that as intelligence. I see that as what I'd call brute force. And the computers obviously have got heavy compounding calculation power that we didn't have when you and I were new to the business.
Right.
And so I think these two things are getting intertwined, where you have these chips with massive processing power, and that's a whole lot different than Star Trek, where you're talking to a computer and you ask it to cure cancer, and it's going to go out with no more information.
Obviously heard though it is curing cancer, and we're all going to be out of jobs next week. So you mentioned,
I didn't hear that.
You mentioned the sea change. The sea change, meaning the reason you're not watching the employment numbers is because you're expecting the economy to roll over. Is that correct?
Yes.
Okay, wait before you say any more.
Okay.
I want to know if this might actually change your point of view in terms of
that. The big surprise, probably the biggest surprise out there for the second half of this year is deflation.
Now, first of all, do you know who that is? You love her. You talk about her all the time on your podcast.
Oh, Ms. Cathie Wood?
That is correct.
The one that I recently announced with my MD degree that she's got the narcissistic personality disorder.
Oh, you're as a medical practicing doctor, you're not supposed to do that.
Oh, I forgot. Yeah.
Okay.
No, this woman is I know it's piling on, but this woman is dumber than a rock.
Okay. So wait, I got a clip that we got to play, and it almost doesn't feel sportive. But like when she said it, I was just like, okay, it's 2 minutes long. Let's listen to the whole thing. You can talk a little bit about over it if you want, but it just feels like it was just right up your alley, because she's not just predicting like robo-taxis in all of our garages. She's now going into macroeconomics.
Okay.
I think the market is looking over the Fed, saying, wait a minute, there's so much evidence brewing here. Not only that there is
inverted yield curve
there,
but
forgive me for using an identity in macroeconomics. It's very simple. It's an identity, and when people
wait a second, what do you think her identity is? She's going to use.
How can you have an identity in macroeconomics?
Well, there are some, but I actually don't think. Well, I don't know. It doesn't matter. But do you have a guess where we're going with this?
Just she's calling for deflation.
Right. So she is, let's just play it. Here we go.
Hear it. They say, oh yeah, that could be the risk here. So what is that identity? MV equals PQ.
Okay.
PQ is nominal GDP, price times quantity, right? First quarter, nominal GDP was up 7%. Okay. So that's good. MV is money times velocity. The velocity of money is the rate at which money,
through the
rate
economy.
at which it turns over.
Yeah.
we now, if you look at what happened in the first quarter, we know that M2 money was down 2% year over year. So what had to happen to get this 7%?
By the way, are you scared that Kathy Wood is quoting M2?
M221, whatever it takes.
Here we go. Let's keep going.
GDP velocity had to go up 9%, and it did. It's an identity. It had to. Okay. The problem now is we had a crisis, a regional bank crisis at the end of the first quarter. A crisis always, or during a crisis, people pull back saying, wait a minute, what's going on here? Especially when it involves the banking system.
Yes.
So
a financial crisis, not a weather crisis.
Exactly.
Right.
By the way, that's Josh Brown.
Second quarter, it looks like M2 will be down 5% year over year. And velocity, if we want to get the consensus nominal GDP numbers, 5 to 6%, velocity will have to be up 10 to 11%. It's not going to be. So I think that's why we're seeing some breaks here in pricing. I think that what is giving way is pricing, because the consumer has been saying, no mas, we're trading down. We are not. So I think that the margin pressure that we're going to see here is going to be serious. And an antidote to that is technology, AI, productivity gains. So I think innovation solves problems.
Okay, so let's just for a second take away the last little bit.
What a fucking mess.
Does it give you concern that if you are a bear, an economic bear, that she is in the same camp?
Does it? No, I don't worry about, the bull bear thing, in that for me at this point in my life / career, I'm much more of a long-term guy. And when I ran that highly levered trading book, I would have a macro theme, but I'd always have my positions organized into 3 buckets: bullish trades, bearish trades, and neutral trades. So if I got my macro theme wrong, I was always going to have something that was going to work. It's hard for me without thinking this through. I do think the inflation problem has started to work its way out, a la Lacey Hunt. And I think she's sort of cribbing what he did. The hard part for me is she does so many things which are just counterintuitive to running a business. It's hard for me to take anything she says seriously. First of all, I don't know. If the velocity of money was up 9%, you're talking about it going from 1.2 to 1.3 or something.
It's a plug number that you do after the fact. People talk about velocity like it's some sort of real thing, and that you can change it and affect it. It's you kind of have the money supply, and then you have your growth, and you have to figure it out. In hindsight, you have one part that you can't figure out, and so you make this velocity, and the reality is nobody really knows why it goes up and down, because that's not really what's driving it as much as they think it is.
Now I'm an old school guy. You're like the new kid on the block. But I've heard of this app. I don't know if you've heard of it. It's called like Venmo. Yeah. There's some way like I could send you money, like I do when I pay for your $350 a year newsletter that I should be receiving complimentary, but that's another thing.
There was going to be a dig in
there. Does Venmo affect the velocity of money? If so, I don't know how it does. What about, like that's a peer-to-peer placement, replacement for how money transfers. Kids, I don't know about you, but you ask my family to empty out their wallet on the kitchen table, there's no cash.
I know. I had to pay someone. I lost a bet the other day on the desk, and I didn't have any cash, and it was too little to to actually send by Venmo or whatever. And I was like, holy shit, where am I going to get this?
So I wonder what you did to pay him off.
I dug up for some change. You would actually be proud of me. I was buying like a high odds trade on the desk. I said, like, okay, go. I'll take that kind of high profile, high payoff trade where it's like, it was 100 pays one.
If we could go back to Ms. Wood for a minute, because
Sure.
you've cut into a little bit of a vein here. The comments that she makes. One is where she tries to explain how losing money was okay because you were going to use those losses to offset future gains. I mean, the losing of money is okay because we're going to have gains. We're going to offset those against. I mean, that's almost criminal.
She says all sorts of shit like that you're just like, I can't believe you're doing this. Like this
I don't know how she's allowed to say these things. So I got a hunch if, I had the kind of following the market huddle did. And I went out and I said, I confidently predict that XYZ stock is going up. And I had earlier in the day bought 100,000 call options on XYZ. And I made some inference like I thought I knew something and it went up and I made a bunch of money. I got a feeling the SEC is going to want to have a call with me asking about how can I trade my own money and then go on and publicly tell people about something.
You're only allowed to do that if it's CDSs and CNBC.
So she goes out and this is the iconic pump and dump where she'll talk up these stocks which she's already bought and they go up and they're small stocks and she sells them out and she made a lot of money and what people aren't asking her is you set up this fund some number of years ago, you were the holy child, and now at the end of the day people would have been better off basically owning anything else. Yet you've had probably 2% or 3% on all those assets under management of yours. How do you feel about that? How should investors feel? And that's why I like the podcasting thing, because there's no editor, right? So when I see something and I can say it, I don't have the same following as or you and I don't have the same following as a Becky Quick or somebody like that. But, these people don't get asked the tough questions. And she would never survive an interview with you and me.
Well, in fact, definitely not with you.
In fact, I challenge her to a debate. How about that?
I think she's going to rush over. Okay. I'm going to give you a choice here. We could do David Einhorn on gold. Or we could talk about, we could do, where are we here? Druck on his two big kind of hitting the ball out of the park.
Well, I'd like to hear Druck hitting it out of the park because I kind of know which way I'm going to go on David Einhorn on gold. But yeah, let's hear the Druck.
Let's do it.
Let me ask one more thing and then I'll open up a little bit. But for the sake of the room, maybe those that don't know your story as well, what's the fattest pitch that you swung at that worked out well?
Can I name two?
Go for it.
Okay. So the first was when the wall came down in Germany. I knew the history of Germany and I knew the history of German culture. And frankly, the hyperinflation of the Weimar Republic is the reason Hitler was able to come to power. And
True.
Ever since World War II, the Germans have not only been embarrassed, but they've been obsessed with inflation, and they had the strongest central bank in the world. So when the wall came down in Germany, I'll never forget, you like to remember your wins. You kind of like, I've had plenty of losses. You try and wipe that out of your mind. But the Deutschmark got killed for 2 days because the theory was the Ostmark, which was the East German currency, was going to pollute the Deutschmark.
That's very true.
But I kind of knew German culture. These people really.
1 second here. Let's just pause here. You remember this period, and you remember?
Oh yeah, I was sitting at 31 West 52nd Street, and the wall came down, and the German bond market for the general population got absolutely destroyed. Little known fact is, in German repo terms, at that point, if you had done a repurchase agreement, which is where you sell a bond to a counterparty with the agreement that you will buy it back the next day, and the change in price is the day's interest. What was convention at that point written into the contract was you actually didn't have to buy it back. So there were a lot of people who ended up coming out long bonds via repo that they hadn't expected. So there were some freaking massive losses out of nowhere.
Explain this to me. So you didn't have to buy it back. You just say, no, you keep it.
Yeah, it's yours. Good luck. Yeah. Yeah, because you know how things go, right? I mean, if you're classically trained in the money markets, you learn all these little wrinkles. And, or as I like to say on my podcast all the time, the second something goes wrong, the first thing people do is they pull out the operating agreement. And so you got a bond that's trading at 100, the wall comes down, hyperinflation they're worried about, and next thing you know, it's trading at 80. And some probably old guy like me sitting in the corner is like, oh, by the way, you don't have to take those back. And it's, as I say to Liam, idea. I may not have that exactly right, but I could spit to it from where I'm at. And but I think Druck's going to talk about the notion that the value that they rated the East German mark and the Deutschmark at 1-to-1, which was a bit of a surprise.
Actually, not. It was. That's a little that he's bigger picture. Let's keep going.
They got a great work ethic. They're rejoining this, and I thought the economy was going to boom. And I knew exactly what the Bundesbank would do. They would just keep raising rates to make sure they didn't get inflation. That's what happened. And out of that, I had a big win shorting the Italian lira, which broke, the Swedish kroner, which broke, and obviously the British pound, which was the easiest of all because in Britain, they desperately needed lower rates because they were an Anglo-Saxon housing-driven economy, and they were going down while the Germans were going up. So that thing just couldn't hold over time. The second one was...
Okay, so if I remember right, he went long the German mark in size. Which was
short the pound.
Yeah, against various other European cross currencies. And the thought was everyone was scared about the kind of the amalgamation of these two countries, thinking that it was going to be bad for the economy. And he said, no, I know the Germans, they're going to take the pain. They're going to raise rates. This is going to be also, I think he didn't speak about it here, but I've heard him speak about this before. And he talked about how it was going to be strong fiscal response because they were going to have to spend all this money to fix up the East German side. And then they would also at the same time be worried about inflation. So he argued that you had this strong fiscal response with a strong monetary response, which would attract capital there. And that's ultimately where it was. But what I find is interesting is that he actually, everyone has all these images of all the great trades that he's done. And yet this is the first one he goes to.
Well, it was a complicated time, and it was, when you get to be a well-known trader, you generally have a landmark trade, and I think for him that might have been it. I don't think that's the one that he talks about necessarily with Soros and breaking the Bank of England.
No, that's a different trade. That's a different trade.
No. But I can see why he likes this because it's intellectually complicated, right? And he's a bright guy. I mean, there's just no doubt
he's
about
the best.
it.
Now, okay, let's go to the second one. Let's see what his second one was.
I bought the exact. Well, it's a long story, but I bought the tech boom pretty well after having missed it.
It's what you were talking about.
Yeah.
In mid-99, made a fortune in tech stocks, sold them all out like 10 days into the year, and then watched everybody else making money, and then did something I don't want any young person in this room ever to do. I acted totally emotionally. I couldn't stand it that the market was going up. All these guys were making 3% a day. I think I missed the top by about a half an hour at Soros.
Yeah.
So I plow in, I lose like $3 billion in 4 months. I'm absolutely devastated. I can't sleep. I've already told him I'm quitting. I send the Duquesne investors a letter and I say, look, I'm going on a sabbatical. I don't know where to come back. If you want to take all your money out, but if you take it out, I might not let you back in. That was good because I had 200 investors and 199 stayed. I came back in September. I didn't read a newspaper. I made sure I didn't follow market. And the NASDAQ had rallied back almost to the high, and the S&P had rallied back to the high. But the dollar had rallied, which is generally negative for equities. Oil had rallied, which was negative for equities. So I called up my friend Ed Hyman, and I said, what is going on? Why is the market rallying? And I said, oil's up, interest rates are up, the dollar's up. I called around to my clients. I had a lot of small businessmen as clients. I didn't have many big institutional investors. All of them said their business is going like this. Greenspan had a tightening directive on. So I was convinced with the anecdotal information with this that the economy is going to tank. And I put 350% of my fund in 10-year equivalents. I was down 18% at the time. I thought I was going to have my first down year, and I made 42% in the fourth quarter. It was the biggest layup. I couldn't believe. Fed funds were 6.5, and 2 years were 6.04. Not that I would remember. So I thought they might go to 2. They went to 1. Those are fat pitches. We don't have anything like that today. Well, maybe we do, but I'm not seeing it.
Yeah. Well, hence my point about the artificial intelligence. Do you have time for a quick story about Stan?
For sure. We always want to hear from you.
So I live in Greenwich, and I live off of a street called Lake Avenue. And if you head one major street south from me, it's called Round Hill Road. And Round Hill Road had a chunk of wealthy hedge fund managers. Stan Druckenmiller, one of them. That guy Raj or whatever, the one that
went to jail.
Yeah.
Okay.
And there was another hedge fund manager. His wife beat him to death by hitting him in the head with his putter. So it's a crazy area I live in. It's not quite as crazy as Chicago, but I digress. So I as you know, I like to ride my bike, and I'm riding down Round Hill Road, and I see this guy, and I'm looking, and I'm like, that's Stan Druckenmiller. And so he lives about, as the crow flies, maybe a half a mile from me. And I'm like, hey, I'm going to stop and I'm going to introduce myself, right? And so I slow down, and he's standing by these old stone walls we have throughout Greenwich, and one was a little out of place. And as I'm starting to ride up, his wife is just ripping him a new asshole about how bad this stone fence looked. And I can see the look on his face is like, what do I do? Like, do I pick an argument over this, or do I just agree? And
even billionaires have to answer to somebody.
The one, I guess the point I want to make is, it doesn't matter who you are.
Yep.
You're always answering to somebody. Yeah.
So, he's such a great guy in terms of also willing to talk about this. Like, how many people get up there and actually share that information, share how tough it was. And that's what I respect about him. I'm such a fan. I think he's literally the greatest investor that's ever been. But anyways, listen. Sorry, go ahead.
Go ahead.
No, you
I was just going to say, and if we're out of time, that's fine, but maybe we can do this another time. You had posted a comment about the art of motorcycle maintenance and archery and trading. And
no, I had talked about Zen.
Zen, yeah,
that's
right. That's worth a discussion, because that, to me, I thought that was going to be one of these things you were going to ask me about, because that one,
I was just waiting for you to spend half an hour shitting all over it on your podcast.
Well, listen.
Okay, wait. You know what? We actually are tight for time. We're going to have you back, but why don't you tell people where they can find, if they want to learn about what you think about my Zen comments, where would they go and listen to that?
I think you go to IBWOC.com.
Okay. Inside Baseball with Old Chestnut, where you and Liam Allen shoot the shit, talk about stuff, share all the things. Make sure you go check it out. Morris, it's been a pleasure having you on the show. Thanks for your time, buddy.
Anytime. I love it. I delight speaking with you, and thank you for having me on.